Canada's economic landscape is undergoing a profound transformation, presenting both significant challenges and unprecedented opportunities for astute investors and forward-thinking entrepreneurs. As we delve into the period between 2025 and 2030, understanding these intricate shifts becomes paramount for strategic planning and informed investment decisions across various sectors. As we meticulously analyze the economic trajectory from 2025 to 2030, a comprehensive understanding of these evolving shifts is not merely beneficial but absolutely crucial for robust strategic planning and making sound, impactful investment decisions. This period promises a dynamic interplay of global and domestic factors that will redefine Canada's economic identity. The Canadian economy has demonstrated remarkable resilience while navigating significant volatility, with its GDP growth exhibiting a complex and often unpredictable trajectory from 2020 through to 2025. This period has been marked by both rapid recovery and unexpected slowdowns, reflecting a global economic environment in flux. Current forecasts cautiously suggest a modest GDP growth of approximately 1.2% in 2025, a figure that, while positive, indicates a tempered outlook. Furthermore, some projections indicate that this growth may regrettably remain below its long-term trend through the entirety of 2026 and potentially into 2027, necessitating careful economic management and strategic adaptation. Inflation and the Consumer Price Index have consistently remained central concerns for policymakers and the public alike, with the Bank of Canada steadfastly targeting a 2% midpoint within its established 1% to 3% control range. This target is crucial for maintaining economic stability and purchasing power for all Canadians. The Bank of Canada confidently projects that inflation will return to its critical 2% target by mid-2025, a significant milestone signaling the potential commencement of a period characterized by greater economic stability and predictability. This stabilization is eagerly anticipated by businesses and consumers alike, promising a more favorable environment for long-term planning. This anticipated stabilization in inflation is expected to decisively pave the way for crucial interest rate adjustments, with a series of carefully considered rate cuts now widely anticipated to occur within the 2026 to 2027 economic cycle. Such adjustments are designed to stimulate economic activity and support growth across various sectors. The Canadian housing market, a sector profoundly and directly impacted by fluctuations in interest rates, has recently experienced mortgage rates hovering near a significant 6%. This elevated rate environment has naturally influenced affordability and market dynamics, leading to a period of adjustment for both buyers and sellers. Despite the persistent presence of these higher interest rates, the housing correction that began in previous years now appears to be steadily stabilizing, suggesting a gradual return to a more balanced and sustainable market ahead. This stabilization offers a glimmer of hope for both prospective homeowners and current property owners. Predictions for the housing market indicate a period of modest growth, though this growth is not expected to be uniform across all regions of Canada. The potential for gradual interest rate cuts in 2025 to 2026 is anticipated to play a crucial role in easing affordability pressures, potentially drawing first-time buyers back into the market. As one astute expert precisely noted, higher rates slowed housing but did not break it, a powerful statement that profoundly highlights the inherent resilience and underlying strength of the Canadian housing market. This resilience suggests a fundamental demand that persists even in challenging economic conditions. The TSX Composite Index has consistently shown significant and compelling trends from 2015 to 2025, serving as a robust barometer reflecting the broader performance and underlying health of Canada's diverse economic landscape. Its movements offer valuable insights into investor sentiment and corporate profitability. Within the TSX, the energy and financial sectors continue to exert a dominant influence, collectively accounting for a substantial 50% of the entire index. This concentration underscores their critical importance to the Canadian economy and their significant weight in overall market performance. However, beyond these traditional powerhouses, a vibrant tech renaissance is undeniably underway, with innovative companies like Shopify, alongside burgeoning sectors such as artificial intelligence and green technology, actively leading the charge in establishing new growth frontiers within the Canadian economy. This diversification is crucial for future prosperity. Furthermore, a significant commodity supercycle could potentially emerge if global oil prices consistently exceed the critical threshold of $100 per barrel. Such a scenario would have profound implications for Canada's resource-rich economy, driving substantial revenue and investment in the energy sector. The TSX is confidently predicted to reach an impressive 40,000 points by the end of 2027 and potentially soar to 50,000 by mid-2031. This ambitious growth is primarily anticipated to be driven by robust commodity prices and sustained corporate earnings growth across various sectors, reflecting a strong economic outlook. Global trade dynamics, particularly the intricate and evolving shifts involving major economic powers like the United States and China, are actively reshaping Canada's export landscape. These geopolitical and economic realignments necessitate strategic adaptations for Canadian businesses seeking to maintain and expand their international market presence. In response to these global shifts and leveraging its abundant natural resources, Canada is strategically positioning itself to become a pivotal critical mineral hub. This initiative aims to secure Canada's role in the global supply chain for essential materials vital to modern technologies and green energy transitions. Canada's ambitious critical minerals strategy is specifically designed to establish the nation as a global supplier of choice for these essential materials, which are absolutely crucial for the advancement of both green and digital economies worldwide. This strategy emphasizes responsible sourcing and sustainable development. Artificial intelligence and the overarching energy transition are unequivocally identified as key growth sectors, poised to drive significant innovation and unlock a wealth of new economic opportunities across Canada. These areas represent the forefront of technological and environmental progress, promising substantial future development. Looking ahead to the period between 2026 and 2030, Canada confidently anticipates a trajectory of steady GDP growth, with annual projections ranging from a healthy 2% to 2.3%. This consistent expansion is expected to be underpinned by various factors, including technological advancements and strategic investments. Artificial intelligence and automation are expected to significantly boost productivity across a diverse array of industries, from manufacturing to services. This technological integration will streamline operations, reduce costs, and enhance overall economic output, contributing to Canada's competitive edge. While global oil prices may regrettably remain volatile, Canada is proactively and vigorously expanding its renewable energy sources, including significant investments in wind and solar power. This strategic diversification aims to reduce reliance on fossil fuels and build a more sustainable energy future. The ambitious goal is to achieve a net-zero electricity grid by 2050, reflecting Canada's strong and unwavering commitment to sustainable growth and environmental stewardship. This long-term vision underscores a fundamental shift towards cleaner energy production and consumption. The TSX Composite Index is specifically targeted to reach an impressive 24,000 points by 2028, underscoring a robust confidence in the market's sustained performance and the underlying strength of Canadian corporations. This target reflects optimistic projections for earnings and economic stability. Indeed, Canada's next decade is poised to be profoundly defined by its unwavering commitment to innovation and the strategic utilization of its abundant natural resources. These two pillars will be instrumental in shaping the nation's economic prosperity and global standing. As we draw to a close, Canada stands firm as a stable, resilient nation, strategically positioned and unequivocally ready for significant growth and prosperity in the coming years. Its diverse economy and forward-looking policies promise a bright future. For more insightful weekly market analyses and comprehensive economic updates, remember to actively engage by liking, sharing, and subscribing to our channel. Your support helps us continue providing valuable content on Canada's economic future.